Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Wednesday, July the 7th, 2010. Well, a continuation of the trend to the downside with the market making a lower high and a lower low. We've had the market close down below the midpoint level, getting near the low, probably slightly below midway between the midpoint level and the low. And that tells us that the sellers have closed the market with a weak amount of control, but they did take control of the market. They've shown a moderate amount of commitment to taking this market lower, although they did lose some commitment as evidenced by the small shadow on the bottom of the candle. Now, the small bodied candle relative to the previous body, it's roughly about half the size of the previous body or even smaller, tells us that the sellers made a smaller amount of net bearish progress on the day between the open and the close and the previous day. So the previous day it was a nice extension in line with the lower high and lower low. Today we continue with the lower high and lower low, but the sellers made less net progress, and that is something that may be cause of concern for the bears. So there is potential for the market to change trend. Now, the market is trading within the cloud, so we do have a market with a neutral bias. There's no bullish nor bearish bias to this market in big picture terms at the moment. But the market is, however, trading down below the Kijun-sen and Tenkan-sen, which means that it's bearish in the medium-term and fast-term time frames. Now, interestingly, the Kijun-sen is looking like it's starting to turn flat. The angle of that is narrowing out. And the angle of these lines tells us something about the momentum that the market has. So in the medium term, it looks as though the market is losing some of its downside momentum. So there is a chance that the market will bounce back up towards both of these indicators. That may not be easy going for this market, because we know that anywhere within the cloud may act as an area of support or resistance. So there's a strong chance that the market will need to do a lot of work to trade up to the top of the cloud, and it will potentially meet resistance at the Tenkan-sen at 85 roughly, and that quite often acts as an area of support or resistance for a market. And then certainly before it'll be trading up to around the 86 level or the Kijun-sen, there will need to be a breakout up above the cloud here. To the downside, if the market does continue with the downtrend, and it is trending down, we do have potential support offered at the bottom of the cloud, down around roughly about 83.50. Now, interestingly, if the market breaks out below the cloud, there is potential for that to be a false breakout, and if it happens while the bottom of the cloud is still flat. Quite often there can be the breakouts from flat clouds are quite often false breakouts, so we do need to watch that. If we do see a breakout to the downside, we'd like to see that as a very bearish candle. You know, down below there's very solid support from 83.22 down to 82.86. So the market will do it tough trading down through there, but certainly good support on the way down below that as well, from 282 and down to 81.4, and the 81.4 coincides with the target from the breakout of the head and shoulders pattern to the downside, so we've got a target there. So what we need to do for the next trading day or so is watch the low of the current candle for a potential continuation of the trend, but also watch the high for a potential change of trend to the upside for the market to test the top of the cloud.